Hyperliquid is one of the fastest growing DEX in the world, a decentralized exchange that somehow delivers the smooth, lightning-fast experience of Binance. Pulling that off is almost unheard of. But behind all that brilliance, there's something concerning. The team remains mostly anonymous with little public info beyond the founder, and the project has been closed source for a long time. That's not the kind of thing you just ignore when so much power is concentrated in so few hands. So, what are they hiding? Welcome back to our series, where we break down crypto projects in a clear, actionable way so you can decide if they're worth your time. Just a quick reminder, this isn't financial, tax, or legal advice. Always do your own research before investing. By the end of this analysis, we'll put Hyperliquid to the test and give it a final score out of 100. Team and development. Hyperliquid's core team is small, technically elite, and battle-tested, led by Jeff Yan and deliberately self-funded, which keeps incentives tight and execution fast. They've shipped major infrastructure on schedule, most recently with the IP3 upgrade in mid-October 2025, and shown strong operational ownership, like swiftly addressing a 37-minute API outage and compensating affected traders. On the flip side, not much is publicly known about the team beyond the founder, and because the project was closed source for a long time, outside developers and security experts haven't had much room to review or verify things themselves. The validator expansion is still controlled by the team, and because it's a small group without the extra layers of oversight that larger, VC-backed projects usually have, the entire operation leans heavily on just a handful of people. In short, it's a fast-moving and highly capable team, but it still owes the community greater transparency. Score, 5 out of 10. Use case and utility. Hyperliquid's main goal is to deliver a high-performance decentralized exchange that feels as fast and smooth as a centralized platform. Its core product is perpetual futures trading, with over 100 trading pairs and up to 50 times leverage alongside a growing spot market. Unlike AMM-based DEX, Hyperliquid runs on an on-chain order book, letting traders place precise limit orders and enjoy tighter spreads, similar to major exchanges like Binance or Coinbase, but fully on-chain. Notably, Hyperliquid also removes gas costs for placing or canceling orders, charging fees only when trades execute, which makes the experience faster and more predictable. The native Hype token secures the network, supports governance, enables new market launches, and, with the recent HIP3 upgrade, allows the community to list new assets, including stocks or commodities, without centralized approval. Score, 9 out of 10. Tokenomics. Hype has a fixed supply of 1 billion tokens and launched with one of the largest airdrops in crypto. About 310 million tokens, 31%, were distributed to over 90,000 users in late 2024, with no VC or private allocations. Another 23% is reserved for the team and 6% for the foundation, meaning 70% plus of the supply goes to the community. A standout feature is the fee model. 93% of platform fees flow into an assistance fund that buys back and burns Hype, while 7% rewards liquidity providers. By mid-2025, the fund had accumulated over $1.2 billion in Hype, creating strong deflationary pressure. The only downsides are that 29% of supply remains with the team foundation, and that buyback strength depends on trading volume. Still, this is widely seen as one of the fairest and most aligned token models in DeFi. Score, 9 out of 10. Hype versus fundamentals. Hyperliquid has been called the on-chain Binance. It now controls 70 to 80% of decentralized perp market share, with daily volumes in the tens of billions, even surpassing $319 billion in July 2025 and outpacing some major centralized platforms. Open interest climbed past $15 billion, and users grew from 30,000 to over 500,000 in a year, showing strong retention well beyond the airdrop phase. Hype's price followed this real growth, reaching approximately $35 plus by mid-2025, fueled by rising fees and buybacks. Still, its heavy dependence on trading volume, centralization trade-offs, and sky-high expectations could become weaknesses. For now, though, this is one of the rare cases where the Hype matches real performance. Score, 8 out of 10. Market liquidity and volatility. The Hype token's liquidity is generally strong, though the lack of listings on major centralized exchanges means most trading happens through the Hyperliquid app or decentralized platforms. And yes, while volatility is a natural part of crypto, especially for fast-growing projects, Hyperliquid helps manage it through built-in risk controls, on-chain stop-loss options, and a token model designed to stabilize market activity. Traders also have access to additional risk management tools to better handle price swings. Still, Hype's price remains sensitive to overall trading activity on Hyperliquid itself, which plays a key role in sustaining both its liquidity and value. Score: 8 out of 10. Security and decentralization. Security on the platform has been strong so far. No hacks have occurred, and the team has responded quickly to potential threats. However, decentralization remains intentionally limited, which is a double-edged sword. This design allows Hyperliquid to deliver exceptional speed and performance, but it also requires users and investors to place significant trust in the core team and validators. If one of the few validators were compromised, or if the team introduced a harmful update, the network could face serious risks. The team is aware of these concerns and is taking gradual steps to strengthen decentralization over time. Score: 5 out of 10. Network activity and adoption. Hyperliquid's growth has been explosive, with its user base jumping from under 300,000 to over 600,000 addresses in less than a year. It attracts traders worldwide, drawing millions of monthly visits and expanding fast through wallet integrations and ecosystem projects like lending platforms, swaps, and liquid staking. This mix of scale, global reach, and active development has made Hyperliquid one of the strongest adoption stories in DeFi today. Score: 10 out of 10. Scalability and technology. Hyperliquid is built for high performance, reaching sub-second finality, and over 200,000 transactions per second, far surpassing traditional blockchains. Its key innovation is a single unified architecture that lets trading and smart contracts run on the same layer, eliminating delays between systems. This design has already been tested during intense market activity without slowdown, showing strong technical reliability. The downside is that such high-speed infrastructure is complex to maintain and requires powerful hardware, making it less accessible for smaller participants. And as a newer technology, it hasn't yet faced years of real-world stress testing. Score: 8 out of 10. Regulatory risks. Hyperliquid hasn't faced regulatory crackdowns yet, but the risk is certainly present and growing. The project exists in a regulatory gray zone. It's compliant in the sense of geo-blocking known restricted areas, but it fundamentally offers services that regulators have historically required licenses for. Investors should consider that sudden legal or regulatory moves like a ban, a legal case, etc., could adversely affect Hyperliquid's operations or the Hype token's accessibility. It's not an existential threat at the moment, but it's one of the few factors that could seriously impede Hyperliquid's momentum if things turn unfavorable. Score: 4 out of 10. Self-custody. Hyperliquid is built as a non-custodial smart contract-based exchange, which means users retain full custody of their funds at all times. In practical terms, when you trade on Hyperliquid, you are trading directly from your crypto wallet with no deposits held by the platform. Even if the front end went down, funds would remain safe on-chain. This gives users strong protection against exchange failures or hacks. The platform supports popular wallets, making the experience smooth and fast while maintaining privacy. However, self-custody also shifts responsibility to users. Losing private keys means losing access to funds. If that feels overwhelming, we at CryptoVagabonds Academy help you build the skills and confidence to protect your assets and manage your own money securely. Bridging assets from other chains introduces some external security risk, and network outages could temporarily limit withdrawals. Despite these trade-offs, Hyperliquid offers one of the most user-friendly and secure self-custody models in DeFi. Score: 8 out of 10. Final thoughts. Hyperliquid is one of the most promising and innovative platforms of late 2025, and unlike many hype-driven projects, it has the fundamentals to back it up. If it manages to push further toward decentralization and stay on the right side of regulators, it could become a lasting pillar of digital asset infrastructure. In the meantime, traders and token holders are enjoying the perks of a platform that truly bridges CeFi and DeFi. The coming years will show whether Hyperliquid becomes the dominant decentralized exchange or whether others build on its blueprint, but for now, its trajectory is undeniably upward. Final score, 74 out of 100. What do you think? Will Hyperliquid shape the future of decentralized trading or inspire the next wave of competitors? Share your thoughts below. And as always, stay curious and stay hodling.